And girls and children of all ages. We are here live here at the Investor Show. We're at the IDAC Summit. I'm sitting here with a distinguished gentleman here, Mr. Kevin Cohee, right?
Yes.
Mr. Kevin Cohee, the CEO of the largest black-owned bank in America, OneUnited Bank. I had to sit down with him, had to grab some time with him, because you know how we do here on the Investor Show. I always want to get good content with good people that we can learn from. So y'all stay tuned. You're going to get a very good episode. Kevin, Mr. Cohee.
What's up, man?
Nice to see you, sir. Nice to finally connect with you. Heard so much. I saw OneUnited. Y'all did a partnership with Marvel and put out a comic book.
Mm-hmm.
That was awesome. But briefly, let's go down the history of OneUnited Bank. How did OneUnited Bank become the largest black-owned bank in America?
Wow, I got to figure out how to shorten that one up. Because the concept for OneUnited Bank is essentially out of Black Americans' leadership desire to have a national Black-owned bank. Mm-hmm. Going back as far as people like W.E.B. Du Bois, people like Booker T. Washington, they both wrote extensively on the importance of creating a national Black-owned bank. No less than Martin Luther King, in his I Have a Dream speech, talked about the importance of the creation of a national Black-owned bank. The belief was that Black people needed to have an institution that was tied into the payment system of the country that could play a role in what they would call organizing the spending power of Black America and its allies and rechanneling it back into our communities. So that's been an age-old dream of Black Americans. We're simply the team that brought that dream to fruition. The reason Kevin Cohee, why Kevin Cohee? Kevin Cohee was working the Solomon Brothers in their financial institutions group, and one of the things that I learned to do during that tenure was to buy banks.
Oh, so you learned how to buy banks. So essentially, OneUnited, if I'm understanding this correctly, they strategically bought up all the Black banks.
We bought it. We started the journey. We bought a bank in Boston. We then bought a bank in Miami. Then we bought 2 banks in Los Angeles. So we're about 4 acquisitions deep into what an investment banker would call a roll-up. And then we had this epiphany. And what that epiphany was that community banking, as we know it, unfortunately, is dead as disco. Mm. And why? These things right here. And what do I mean by that? It's becoming increasingly difficult to get people to drive down the street and around the corner and stand in line, no matter how good your donuts are.
Yes.
They want all their financial information. The princes of the world want all their financial information in their hand, available to them 7 days a week, 24 hours a day, and they want to spend money all over the world, and they want to be able to access it all over the nation surcharge free. So technology, amongst the many advantages it creates, is pure convenience and people's expectation of how they will receive financial services. That's one important part. But there's an even bigger phenomenon that financial technology helps with, which is it allows for the creation of completely unique banking services that go beyond the capability of existing what they call utilitarian bank products. So a typical utilitarian bank product would be like something like a checking account. Yeah. What a checking account does one thing, it helps you to spend money, which is a cool thing. But for example, One United Bank's lead product, what it does is called Wise One. It uses data aggregation technology to pull together all a person's financial information, not just the information that's in the bank, but all their financial information. So many people for the first time will know what their actual assets are, what their liabilities are, therefore what their net worth is or isn't, what their revenues are, what their expenses are, what their surplus or deficit, as the case may be. And most importantly, they know how their cash is flowing. In other words, when money's coming in and when money's going out. And we do that in a gamification kind of way to help bring a clear understanding to people.
Nice. Now, just how big is One United Bank?
Well, when you say big, it depends on your perspective.
We have
assets under management over $2 billion. Yeah.
$2 billion.
Over $2.6 billion, actually.
$2.6 billion assets under management. How many branches?
We have 6 branches. We have 6 physical facilities in Miami, Los Angeles, and Boston. Actually, we have 8 facilities. But the way we primarily do business with people on your phone, you can go to OneUnited.com, check us out. It's very easy to open an account. So our customers are mainly digital customers.
Yes.
So
you need all these physical locations.
Yeah, physical locations are primarily within the way people use our physical locations is to access money on a surcharge-free basis. One United Bank has, frankly, more surcharge-free places, ATMs, than any other bank in the country.
And how do you do that with the ATM? Like someone says, hey, there's only 3, if you're only in 3 cities, I'm in Denver, how do you do the ATM fee?
Well, for instance, Chase Manhattan Bank, One United Bank customer can use any Chase Manhattan Bank ATM for free. It can use any Citibank ATM for free. And there are a number of large retailers that provide that same courtesy to One United Bank customers. So One United Bank cut a deal with you with these various institutions, both banks and non-banks, where One United Bank customers can access their money surcharge free. So we literally have more locations than any other financial institution for getting your money for free. So you do your banking electronically, number one, and then you access the money if you want money, actual dollar bills, which, by the way, as you know, people are using dollar bills less and less with all the various, everything's all digital. So the world that you have to think about banking as the world will shortly be. And I'm not even talking about long periods of time, but you 5 years from now, 10 years from now, banking as you know is going to be radically different because of technology. I suppose you may remember the world before cell phones.
Yes.
Okay, and it was hard to imagine, for instance, that you would need a phone in your home. And you might have told me, what are you talking about? I don't need a phone in my house.
Exactly.
Why would I not need a phone in my house? Okay. Well, that's the thing. Technology displaces things that seem ordinary and normal. See, like you're talking about branches, okay? Frankly,
you're
talking about old technology. Yeah. You're talking about that's the equivalent of the phone in your house.
Well, Kevin, I go to the bank about every 6 months.
Okay. What I would say to you is why.
Yeah.
Okay.
Yeah.
What is it? What is it you're going to do? Are you going to say hi to the folks, or I mean, if you want some friends, you get some friends, okay? But but it between customer service, you have to have the human touch. So we have very elaborate customer service centers. But for example, artificial intelligence is built into our customer service offering. So here again, think about if you were thinking about something very futuristic, like if you were to imagine what a bank would look like and what kind of questions you want to ask it. If you just want to know, hey, did I spend this money here? Or did I spend this money here? What were my last 3 transactions? Or that kind of stuff. We handle all that through artificial intelligence. Not that you can't talk to a human, because we believe it's very important to manage the human touch, but most of the things you want to know can be handled through artificial intelligence. So artificial intelligence is a very important part of the infrastructure of One United Bank, both for providing customer service, but also the product I was telling you about, Wise One, is not just that it aggregates your data, but it uses artificial intelligence to help you make better financial decisions. Now, that ability to help you make better financial decisions is critical in our country. Why? Because it helps deal with the biggest challenge we face in this country, which is financial wellness. And that's caused because of the lack of financial literacy.
Now, going to that question, I want to get into the conversation we see that's happening around the community, right? Especially when the George Floyd happened back in 2020. You saw this big push of, we need a black-owned bank. And then you saw Killer Mike, who's been a guest on the show here. He was speaking about Greenwood. We need to create this black-owned bank. But we already have one, right?
Well, Greenwood wasn't a bank. See,
they're talking about creating one with a name.
They were talking about things that weren't possible. See, the thing about banking in particular and financial services, you actually really do need a regulated financial institution, something that's insured, so your deposits into the bank are actually guaranteed by the government. There's a difference between what's known as a financial technology company, and that's what you're talking about. You're talking about many people who were saying, we have financial technology that can provide you with certain services.
Hold on, Kevin, I want you to break that down. The difference between a bank and a financial services.
A fintech, a financial technology provider.
Because I don't think you really understand that. Break that down for us.
To start, don't give anybody your money where the institution doesn't have FDIC, Federal Deposit Insurance Corporation, guarantees, What makes a bank is that the money you put in the bank is guaranteed by the federal government. That's called FDIC insurance. Yes. Now, there's a big distinction between actually being a bank or being a company who says you have a relationship with a bank. That's what Greenwood was.
I read into that and saw that where
it was not a bank.
They was going to get Bank of America stuff. They used this person's stuff. So you said that wasn't a bank. Yeah. It was just you was going to lose other people's systems.
That's what they call fugazi.
I ain't want to start no start.
I'm just telling you what it is.
So you said it was fugazi because
it wasn't a bank. So you can't play with your money here. The technology and the utilization of technology is important, but you got to do it with an FDIC insured commercial bank, not somebody who is affiliated with a bank, has a relationship with a bank, and uses words that make it difficult to understand what the relationship is. And in fact, interesting enough on this topic, the federal government just passed another set of bank regulations where they're going to make you put FDIC insured in big bold letters. You put your name, the name of the bank, like One United Bank, and you have to have this big lettering that says FDIC insured bank, guaranteed by the full faith and credit of the United States government. So people have noted exactly the issue you're talking about, and they cleared it up. So it will be a big sign. If you see somebody's name, it will say FDIC insured bank with the full strength and credit of the United States of America. So this problem, this confusion of people being able to kind of talk around the issue of are they a bank or not. If they're not a bank, you shouldn't be putting any money in it, period.
Got it. So I guess the financial services people, they will say, hey, I'm going to partner with One United Bank, then I'm going to put my name Prince Dykes Bank.
Right.
But the deposits are really going to go to you who are FDIC approved.
Right. Yeah. Now
I'm not really going to hold the money. I'm using your system. I'm guessing that's the way why they're saying their bank.
I'm telling you, don't do that. Okay, that's what's known as a scam. Okay? Yeah. So what I'm saying to you is those types of institutions.
I'm trying to understand what they were doing, or like how were they?
Well, they were doing exactly what you're saying. What they were doing was using language to create the implication that they were a bank when they were not. So they were using fancy words that might confuse a person into thinking that it's an FDIC insured commercial bank. Now the thing is,
Kevin, I want to say this before you finish that thought. So it's almost like I've seen some investment firms do this, where they are a fund of funds. Meaning their whole investment, they just invest in somebody else, right? Or I've seen it where even in my industry, being a registered investment advisor, they'll be a firm, they're just the face, but then they have a whole back office is a whole nother firm. They're just the person that's getting all the documents, and then somebody else is handling all the money, pushing out all the documentation. They're just the person to get the documentation, take it to the client.
Well, now that's a different thing. Okay, there could be that can be all right. So for example, if you have an investment company that doesn't have the ability to administrate the fund, in other words, they don't have the customer service operation, they don't have the operating infrastructure to process all the pieces of paper that need to be processed in order to make it.
Outsource it.
And so they might outsource that, but then they may, for example, it could be they may have a particular expertise.
I've seen some people outsource the whole investment process.
Well, okay. Now here again. See, there's distinctions here because it can be.
It could company feel like, hey, I'm just going to outsource this,
or they may
share their ideas to, I'm guessing maybe share their ideas like, hey, I want you to do this, do that, and to kind of move about it that way. Whereas I guess it's outsourcing instead of doing it in the house.
And what I'm saying to you is there are very different types of relationships. I would say within something like banking, where you need a government guarantee, you need to be doing business with the actual bank, not anything outside the bank. But what I'm saying to you is there are many businesses that use where companies use third parties to provide various services, and that could be totally legit. Most businesses, if you look at them carefully, like you can look at a major technology company, like here again the iPhone. Okay, so but that's not necessarily everything in that phone isn't made by Apple.
Yeah,
okay,
that's true.
So there could be somebody else. They could be
made in China.
They're assembling different parts of in many technologies. Different things are assembled to make things work. And it's quite viable that people, for a whole variety of reasons, may not want to get into a certain business. Like we have our own customer service operation because we had to, because we wanted our customers treated in a very particular kind of way. We promote a familial environment where we know you and people can be comfortable, and they don't, not necessarily subject to our artificial intelligence software. But it would be valid for a company not to be able to put together that kind of infrastructure. So we have to be. It's important to make the distinction between these two different things. Institutions that you need to be connected to because you need their insurance, you need their guarantee, and a company that's providing a service that where they're in partnership with someone else who could do things perhaps that they can't do.
Now, how would you feel if, let's say, I guess in banking, what makes the difference is that you're saying, hey, you can't go advertise yourself as a bank and then outsource everything. It's like, hey, I'm not FDIC approved, but he or she is. who's going to be holding the money is FDIC approved.
Yeah,
how do you feel about that type of relationship?
Then banking, you don't play with banking. That's like playing with your money. Okay. Yeah, banking is nothing for that. You got a bank is a very specific. Okay, banks, in order to be able to provide you the full credit and faith of the United States government as a guarantee of payment, are regulated. So a bank has these federal government officials and these state government officials who are coming into the institutions all the time, looking at what they do and what they don't do to ensure the integrity and safety of the system. These have been in place for hundreds of years, and so you're talking about, when you're talking about money and protecting your money and ensuring the integrity of your money, that's not anything that you want to have third party. Like, you don't want anybody in front of your guarantee of your money. Mm-hmm. Now, here again, you have to distinguish that, because there are many, many very valid business enterprises, some of the most well-known enterprises that use different companies to perform different functions. And here again, it's quite common to outsource administrative functions, because there's some administrative functions can become so complicated that it's better to have a single company that specializes in the provision of those administrative services versus whatever the core business of the institution.
Okay. Now, for yourself, when you look at, what are some ways that, let's get into this, collaborating with Marvel and putting out the comic book on financial literacy. How did that happen?
Okay. Well, first off, understand the how. Okay, the how we got here is a big deal, and it's something that people don't really understand. People don't understand this thing that happened to our society. Okay, we were in this country that had this history of systemic racism, and that history of systemic racism was holding back certain groups from making economic progress in our society. That was a real thing. There was slavery, then there was Jim Crow and various forms of Jim Crow. So that was a real problem. And so the haves and have-nots were determined by that kind of thing, race, religion, etc., access to opportunity and all that. Well, just almost out of nowhere, there was this paradigm shift. And what was the paradigm shift? Well, the haves the key characteristics of the haves became being financially literate. So in other words, what's the people who have in our society, the key characteristics they have in common has nothing to do with race and religion anymore. It's their financial level of financial literacy. Because if you're financially literate, you get better jobs, you know what to do with the money when you get it. And so that small group of people's net worths are growing exponentially, particularly compared to the rest of society. So you have this small group of haves who are characterized by their knowledge that are growing income at a huge pace. Then there's 90% plus of people who are stuck and can't go anywhere. Why? Once again, not because of their race or religion, but because they're not financially literate. So because they're not financially literate, in today's economy, with today's technology, they can't get access to opportunity. They can't get jobs that pay at the kind of rate that financially literate people get jobs, and they don't know what to do with the money when they get it. So as it turns out, that's most of society. So you created this big, and then with the way people talk about it in modern days, they focus on this income gap, and they might call this income gap things like the racial wealth gap. Okay, that's what they're referring to. That what it is not it's that's one of the manifestation of it. But the real phenomenon is the financially literate versus the not financially literate.
Now, what you got to say to people that say, hey, someone who works where we're at now in a private equity firm, they're making 6 figures, some even 7 figures, right? And here I am. I want to say the average black man in America is like 45,000, right?
Yeah.
The average black man in America is 45,000.
Well, you say black man. The average person who is not financially literate is making 45,000, whether black or not.
Well, I just read it for the Bureau of Labor Statistics. I don't know. Now you're going even further. You're saying, hey, they're putting a demographic on it, but nobody's probably measuring financial literacy to income.
Exactly.
Right? Since nobody's putting that in there, the only number you got is from the Bureau of Labor Statistics that says, oh, the average weekly income.
No, and I'm not saying you're probably right. Okay.
No.
You know what I'm saying?
I read now. Tell them. Y'all better know. So, but with that, some people are saying, hey, because my income is so low, that's why the wealth gap is increasing. But you're saying it's more knowledge-based. Some people say, hey, if I made that money, if I was able to get that great job where I made $150,000, $200,000, if I was an NFL athlete, then I wouldn't have all these financial problems. I have these financial problems because I don't make enough money, and I don't make enough money because of my nationality, the color of my skin, my gender, and what do you have to say to that?
That's the phenomenon I'm telling you about. That's the dated thinking. Okay, everybody thought that. Okay, but what's happening now? Here again,
that's cool. That's cool. What you're saying. You're saying financial literacy to income.
Financial literacy is driving income. So what I'm saying to you is it's not
that. Break that down. How is
okay? All right. Okay. Here again, you say, why am I making $45,000 as opposed to the person working at the private equity firm, as you mentioned, because it says, or 200,000. What's the main difference? It's the level of financial literacy between the people. Like if the person who's making the $45,000 was really financially literate, they wouldn't be making $45,000. If they were really financially literate, they would be able to use that literacy to get bigger job opportunities. It's not like the haves don't need people to continue to grow. The haves have enormous need for people who have the right set of skills necessary so they can have more. There's no shortage of skills of a place like this we're in right now. It's not. If you come in here, if a person walks in here and they're really financially literate, they have a really high level of financial literacy, they're going to give them a job so fast it'll make your head swim, whether they were black, green, or purple. Why? Because it helps them to make money. Okay? It's not. But financial literacy begets money, and so having the set of skills that helps others to make money drives that person who's making more money to want to give you more money. But if you don't, just hear me out for a second. But if your skill set doesn't cause the person to make more money, no matter how hard you work. You could be the hardest worker there is, but if it's not making them any more money,
don't get rid of you.
They're going to get rid of you. They will keep you, but they're not going to pay you more money. Okay? This is a very important thing that I'm telling you about. It's why financial literacy is so important in our society. It is the reason that the have-nots cannot move from the position they have. And people, this single thing I'm talking to you about today, this phenomenon, creates these massive challenges in our society.
So you're saying the old dated way was to say, hey, these income levels are dictated by race.
Exactly.
Then some people say,
race, religion, that kind of stuff.
Race, religion, gender. Then you said,
exactly.
Then it was a time.
And it was.
When people got older, where they said, hey, you know what? It has nothing to do with race, it's education. So you saw a bunch of people get a bunch of education, but then they're still not making the money they thought they was going to make, they was going to desire to make. And you said it has nothing to do with your education. It has nothing, so you saying financial literacy is
a form of education.
Is a form of education.
That will make you more money.
Okay.
So you can educate yourself about many things. It won't help you make any money, okay? The financial literacy is the key to driving financial wellness in our society. Here again, if you go and ask Americans, what are you concerned about? The first thing out of their mouth is going to be the money for this, the money for that, and how I'm going to get the money for this, and how I'm going to get that. It's the top issue facing, but it's not just Americans. It's the top issue in the world. It's a worldwide problem. Lack of financial literacy is a worldwide problem. And now we know why this exists. The reason is because our education system, K through 12, does not teach financial literacy. So guess what? If we didn't teach reading, what would we have? We'd have a bunch of people who can't read. Instead, what we do is we don't teach financial literacy. And because we don't teach financial literacy, we have a large population that lacks financial literacy.
Yeah, and so I wonder, when you said this about how OneUnited was buying banks, and you learned this from Solomon Brothers.
Mm-hmm.
A lot of people don't even know about the tie from Warren Buffett to Solomon Brothers.
Mm-hmm.
Well, back in the day when they had that whole big, what was it, government bonds or something like that with them.
Yeah,
now
something like that.
Why would a bank sell?
Why would a bank sell itself?
Why would a bank sell itself?
Okay, well, here again, that's
because people think of a bank, they think money. They're
But think of a bank like this, and you kind of were hitting on this earlier. Okay, if you have two banks, you have two operations. You have two banks that provide goods and services, and they have two operations that operate the bank. Well, if you put the banks together, you only need one operation. So you can get rid of all the costs associated with one of the operations. You have the same level. You have the same. You have twice the revenue because you put the two banks together, but you only have one of the overheads. So guess what? If they put together, they worth more money.
That's true, because merging acquisitions.
That is a reason to do an acquisition, and it's also a reason that two companies might merge. Two companies may decide, hey, you know what? If we get together, we don't need two operations. We don't need all the people associated with running. You got all the people associated with running your company. I got all the people associated with running mine. Why don't we just let all your people run the company, and we'll just keep the revenue of the two?
I even seen that happen recently with nonprofits, right? Hey, instead of us, we do the same thing. Instead of us going to the same donor to fund XYZ, what we should do is we come together,
mm-hmm.
then we have the one donor, and then we have more capital that way. You know what I mean?
Yeah.
So that makes, and I want the viewers to hear that, like, because people see a bank, they think, oh, bank money, they all got money, they're fine, that's why I put my money. But when you see a bank up for sale, you're thinking, how can a bank be up for sale? They have all this money.
Well, people sell companies for many reasons, and this once again, this all goes back to the same issue we're talking about, which is financial literacy, and why it is such a pervasively important thing for us to achieve in our society. So what do we have to do? One, we have to make it so that a course of study in financial literacy is a mandatory requirement to graduate from high school. So in other words, that can be done in any state, and that's happening on a state-by-state basis. That's one of the things that OneUnited Bank is involved in, is helping to pass laws that will allow for mandatory requirements to graduate, for mandatory courses of study in financial literacy to be a mandatory requirement to graduate from high school. So that's one kind of thing. Also, you need institutions like ours who have products and services that have directly addressed this issue. Because what you have is this society, the have-nots have a whole different set of banking needs and a need for services. The kind of problems people have are different depending on where you are. For example, a very big problem among people who are challenged financially is they don't have backup resources for when bad things happen.
Yeah.
Here again, like I said, you're driving to work,
tire goes out.
What now? Okay? And most Americans have $400. Okay? So now if anything happens that costs more than $400,
it's a problem.
It's a problem.
Credit card or loan,
Well, if you got a credit card, or well, that's when financial technology like One United Bank, where we can look at you, assess your situation, and our ability to be able to lend you that money within hours. Okay, that's One United Bank's cash please problem, and for every variation of that, what we talked about, hey, you took the kid to the hospital, you end up with a $2,700 bill out of nowhere. Okay, that's not the kind of financial problem the banks are set up to solve. And that's why you have this whole industry called predatory lenders, who exist for when people unfortunately get in those types of situations. So for that whole realm of what we'll call financial rehabilitation type needs, you mentioned something. You're stuck in check systems, so you need to get out. You need a second chance at a checking account. You need to initiate credit because you don't have credit. You need to rebuild your credit. All that kind of stuff. You need assisted savings accounts, automated savings accounts. So One United Bank uses the technology to create those unique products that are for the 90% of people who need those kind of services because they're in the process of becoming more. Well, I'll say it like this: they're in the process of becoming more financially. Okay.
Now, you spoke about slavery, Jim Crow, different forms of Jim Crow. You explained how we got here. Now, back to the question of Marvel. How did you make that connection?
All right. Well, one of the things that One United Bank does is because One United Bank, these stories I'm telling you, affects tens of millions of people. One of the ways it affects tens of millions of people is because of the collaboration it can form with corporations and this ability to use social media marketing techniques. The particular project you're talking about, which is just one example of it, because we've distributed over 1 million of those comic books, was because of our relationship with two companies, Disney and Visa. Disney, Visa, One United Bank, all understand everything I just told you about, therefore it's a financial literacy. And so as institutions, we work on programs to help make society more financially literate. So corporations understand this problem that I talked to you about and want solutions to be able to deal with it. So what we came up with, we said, if we can work with Disney's Marvel Comics division, then that would give us the creative tools to be able to create a unique product and service. Okay. And so what ultimately was developed was a comic book, which uses Black Panther and Black Panther's sister, and I always butcher the name, but I think it's Suri, okay? Yeah. But I might have got that wrong. And what you have is these two superheroes that are teaching financial literacy while they're trying to save the planet. Now, the thing is, the graphics and the story are so intriguing, and the tactile nature of being able to touch something by hand in this digital age cause people to just be really inspired by it, inspired by the book, and it's caused people and institutions to focus on the importance of financial literacy and to understand that gamification techniques, entertainment, what they call infotainment, and that's the category that this falls in. It falls into the category of infotainment, causes people to be excited and interested in it. Here again, not just children, but people of all ages are inspired by this thing you're calling the comic book, because it's a fun way to learn. It addresses the issue of diversity, and so many people like the diversity element of it in addition to the lessons in financial literacy. So the real key was the recognition. This is that post-George Floyd environment where corporations can come together. Corporations like Black-owned businesses like One United Bank can come together with mainstream organizations like Visa and Disney, and we can put through our collective intellect and our collective skills, we can put together unique products and services that can drive change in society.
Okay. That's pretty cool. That was pretty dope how y'all did that too. Now, how did that relationship kind of happen? You just kind of knew them, or somebody reached out and said, hey, we want to do this? How does those type of relationships happen?
Well, it's kind of relationship, yeah, that's it. But when you say networking networking within a technological age. Okay, so for instance,
that's a good question. How to network in a technological age?
Okay, then take like for instance this conference. We're at a conference, and there are hundreds of people at this conference. Well, every single individual who came to this conference, we have a profile on. Okay, so like we know who the person are, we know what company they work for, we know what kind of things they're interested in, so we know what we need to talk to them about when we meet them. Before we came to the conference, before we came here, we wrote people, we sent out information to people to try to get meetings set up for when we were in the conference. So before we didn't just walk into the conference and start dapping people up and all of that. We had I had documents with every single individual at the conference, who they were, what they do, what would be the possible relationship with OneUnited Bank. So networking in a technology-driven age, that's what it's about. It's about using technology to help you organize information effectively. Networking is also it's I'm not saying it's not emotional, but your emotions are helped by when you have the opportunity to meet more people and you know information about those people. So that's the kind of thing that technology does, and technology dramatically changes your ability to be a more effective networker.
Okay, because you got phones now, Zoom, you got information on people. You can look them up on LinkedIn now.
All of that.
All this stuff. Oh, they're into this. They post about this. Talk what their interests are. How many kids?
You could have. I have all that for the profile that my team gave me when we came to this very conference included all that information.